Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.
Hello, everyone, and welcome to our podcast, What Your Bank Doesn't Tell You. Today, we have a very special guest, one of our partners, who does something incredibly interesting. Aurelio, welcome.
Thanks a lot for inviting me, Ruba. Happy to be here.
Pleasure is completely ours. Aurelio is the founder and the CEO of Splint Invest. He grew up in Solothurn, beautiful city close to Bern. He studied economics at the University of Bern and is also a PhD in economics. And what is very interesting is Aurelio started his career very classically and traditionally. Like most of us who studied economics, you started in audit with PwC and then made an amazing jump, quite a far cry, starting an own company, becoming an entrepreneur. How come?
It sounds really like a big shift, but actually I was always very entrepreneurial, even within PwC. I really enjoyed working there, but I never fully arrived there in a way because I had a lot of drive and initiatives and I had to learn that working in a corporation is sometimes hard if you try to change things. So you have to adapt and stay calm and patient. Luckily at PwC I met amazing people. A few of them had the same entrepreneurial spirit as I do, and we started thinking about our own company and ended up in founding Splint Invest a few years later.
Amazing. And when was that?
Actually, we started thinking about the idea in 2019, 2020, but back then it was not like an idea of creating a business. We just started to learn more about alternative investments, especially whiskey casks. And only in 2021, mid-2021, we decided to start a company.
Amazing. So it's already in its fourth year, actually 21, 2, 3, 4.
Yeah, it is. But officially, we actually launched only in February 2022. So there was a full year where actually the company was there, but we were all still fully engaged at PwC. And I would call it was like a very interesting side project, but not a startup.
Fully fledged. And what was the moment which really made you say, okay, now we're jumping out and we're starting the company?
I remember that moment explicitly because I was on honeymoon.
Oh, nice.
And we had a call with the team about Splint Invest. And somehow my wife was not very happy that I was having calls during honeymoon. And on the other hand, the team was very frustrated because we were working 100% at PwC. And in the evening and on the weekends, we tried to work on our project. But we ended up in being very frustrated because no time, no results, a lot of frictions. And we had this call, I think it was in October 2021. And I ended the call realizing that's not the way how we can go ahead. Either we go all in or we stop. And then I was reflecting a little bit and personally decided that for me it's clear that I have to go big or go home. And luckily I was able to motivate the other ones to follow.
This is amazing, and this is a truly inspiring story because, as you say, and we had the same experience, by the way, very similar start, Tony and I, when we also started brainstorming 2019, and we also had exactly the same experience. We said, look, you are either in or you don't do it. You can't do halfway. But I know how difficult it is to decide to take this step, and then afterwards you don't look back. You probably never regret it. Tell us something about what does Splint Invest do and where does the name come from?
Actually, it's a platform to invest in lifestyle assets. Lifestyle assets are assets like art, wine, watches, handbags, basically everything with a physical substance you can invest in. And investing in such assets is nothing new. So we're not very innovative because we learned that you can invest in watches. That's something which was here for a while and people do it since years. Our part of innovation is actually to democratize the investment process in a way that you can start participating with small amounts. So on Splint Invest, you don't have to buy the full watch, but you can start investing with small fractions of 50, 100 euro, 200 euro, whatever fits your budget and your portfolio.
This is amazing. And actually, we share the same mission. We are also on a mission to democratize investing, to make it accessible to everyone. When we speak about stocks, bonds, and ETFs, and all those type of instruments and asset classes, it's much less emotion than when you say, I'm investing in a Birkin bag, or I'm investing in a wine, or in a watch. And you're right. Lifestyle assets have been traditionally preserved for the very wealthy, because if you want to invest in the category of watches, for example, if we stay at that example, it's quite a big substantial initial amount to do. And lifestyle assets, I know it from banking, when I was working on the side of the ultra high net worth individuals, this asset category has amazing performance over the years, obviously depending on where you enter or where you exit. But it's really very inaccessible for most of the people because it's very high stakes. I mean, a EWC watch, for example, would be 20,000, 30,000, 40,000 Swiss francs. Some of the big names even more, and how many people can afford that? So it's a great innovation and a great achievement to make it accessible to each and every one of us with already 50 francs.
Yeah, totally. And something which we often forget, but it's crucial, is like you have to diversify.
Yes.
And maybe you can afford to buy one watch for 40,000 Swiss francs, but then all your money is allocated to one watch.
It's
and
true.
If that was a lucky pick, then nice. But maybe it wasn't the right watch and the market isn't developing as you were expecting it. So I think that originally, when we started, we were building the platform for people investing very small amounts. Mm-hmm. But over the time, we learned that actually our target audience is wealthy, but not super wealthy.
Yeah.
So they can allocate up to 50, 100,000 to this asset category. But if you have 50,000 to allocate to lifestyle assets and you know that diversification is important, you love using Splint Invest because then you can have a little bit of wine, a little bit of watches, a little bit of art distributed over many different objects rather than buying one or two objects on your own. I think this is really, really the benefit of using our platform.
It's true, and it's really, we can say that of experience, it's very inspiring what you've built, and it's very easy and intuitive to navigate and to find the right product. Would you tell us something about the categories in lifestyle assets? Because we just dropped certain, some objects, they're very emotional, but what are typical categories in lifestyle assets which you allow access to?
The list is growing, by the way, and I think it's never finite. We're adding new stuff
by the minute, by the
every
day.
month. The reason why we're adding categories all the time is because we learn a lot by doing a lot of research. Yep. And currently you have, I think, 13 or 14 different categories.
Okay.
We started with whiskey casks, watches and wine, very traditional categories. Yeah. We added art and cars very soon, as well, a very obvious choice. But now we also diversified into sneakers, handbags, Lego, Pokemon cards, sport memorabilia, old books, violins. Like, meanwhile, the range of categories is really amazing.
It's great. Incredible. I can very much associate with old violins and with the old books. My kids would immediately say Pokemon cards. It's great. Speaking of lifestyle assets, I remember something which actually stayed stuck in my mind. I remember it was, I think, 2015-16, and we were talking to a wealthy family about building up a portfolio, and obviously talking in the realm of the liquid assets, equities, bonds, commodities, and then the family goes like, yeah, but we have like this collection of classic car, nothing can match this performance. And you're right, it's amazing if you get the right asset, but you need to know, obviously, which one is it, what performance can you achieve. So diversification, like everywhere, is also key. Aurelio, what's very interesting is throughout my banking career, I've always had encounters where people would invest, wealthy families would invest in cars, would invest in art, would invest in other lifestyle assets. And what was always very interesting is to see how the performance they would achieve with these assets compared to the performance you would achieve with liquid assets. Would you comment on that? That'd be interesting to hear also for our people out there who are considering to start investing.
Yeah, sure. I mean, the expected performance, or also the historical performance of lifestyle assets is and was very interesting. One important factor to just consider is that you need a lot of patience to achieve this performance, actually. There are many reasons. On one hand, the transaction costs are very, very high. So, to buy a stock through an online broker is super easy and usually with low cost. So buying and selling can happen quickly and doesn't cost too much. With lifestyle assets, starting to invest, to buy such assets, you have high transaction cost and as well to sell. So if you're trying to maximize your profit from a short-term perspective, it's definitely not a suitable product, because even if there is an increase in value in a short period of time, your transaction costs to start investing and to resell are so high that it's eating up all your performance. So you need a lot of patience. And the second part, which is very important as well, often the increase in value is coming through time. Mm-hmm. So if you think about cars, for example, the reason why people are willing to buy cars for a higher price in 10 years than today is because there are no more cars in the market with a low mileage in a good condition in the market. So but this increase in value is just coming because of others are using the car. and this only happens over time. So I think these are two very important components to consider about the why.
That's very interesting. And so it requires certain knowledge of certain deep knowledge of the particular type of lifestyle assets where the users would go into, right?
Totally. I mean, there are two levels of experiences you need. One thing is the experience within the asset category. Mm-hmm. This is something where we help as a platform because we work with experts in every category and they take care of choosing the right asset, choosing the right time to invest and to exit. So this is something you don't need to worry about. But the second level of experience, which is very important, is your personal experience as an individual investor. So if you just started investing, probably lifestyle assets aren't a good fit for you. Mainly because of this illiquidity and the long investment horizon. But if you have some experience with investing in ETFs or stocks and bonds, you might be interested in learning about alternative investments from a diversification perspective and also from a long-term return perspective.
That is super valuable. And also what we observe is in our education, in UMushroom Grow and Learn, we teach this type of wealth structuring, saying that part of it should be ideally up to 70-80%. You should invest long-term in your core part of the portfolio. And normally you would pick up their liquid ETFs of stocks, bonds, etc. And in the 20 to 30% remaining, depending on how you're structured, that would be your satellite type. And if I hear you correctly, I would rather allocate the lifestyle assets in the satellite type and probably out there also certain small fraction such that you feel comfortable with as an investor. And as you correctly said, less suitable for beginners, more for people who've already traded an ETF, who have already traded a stock, a bond. Well, bonds actually also have this issue that you need a high denomination, but let's say stocks, ETFs, cryptos probably, etc. What are typical risk and return particularities of lifestyle assets? We already mentioned that they're typically not so liquid. So there is a liquidity premium when you get in and out. What else would you say is important for our audience to hear?
I mean, it differs also within categories and cross categories. Mm-hmm. Just to give you a short example, if we talk about art as one category, within art, you can invest in blue chip artists, which are super established, and there is a huge market, and they have a track record over many, many years, like Picasso, Andy Warhol, a lot of data, a lot of track record. The risk profile of such of this kind of investment is low risk, but also the expected return is not super high. You can't compare it with the upside potential of crypto, for example. So I would say this is a rather conservative investment where you have a certain upside, but definitely a limited downside. On the other hand, still within art, you can think about emerging artists. Yes. They just started a few years ago. They have maybe a few collectors which are buying their paintings, but they had maybe a few auction results, but not too many. And the risk profile of this kind of art is completely different because it's like gambling. Maybe the value of those paintings is going to be 3 times the value today in a few years. Maybe it's just 10% because no one cares anymore about this artist. So I think it's not just the risk profile of lifestyle assets, it's really the risk profile of a subcategory. Yeah. Generally speaking, I would say you have always this somehow limited downside by the physical substance.
Yes.
So like the risk of total default,
you still have the emotional value, right? If you own it, and
yeah. Oh, totally. If you own the whole asset, you still have the emotional value, but also like the monetary value. Like,
yes,
we can argue that probably Rolex watches will be worth more, less, or the same in 5 years. But I think we all agree that there will be no world where no one is willing to pay anything for a Rolex watch. So somehow
you can't default on that.
Exactly.
Yeah.
So and I think this is kind of unique.
It's floored in that sense.
The question is, where is the floor? But yes, there is a floor. And on the other hand, I would say that the upside is also different, especially the upside in relation to the time horizon. There is a good upside potential if you're thinking about 20, 30, 40 years. But usually people don't like to invest for 20, 30, 40 years. And within a time horizon of 5 to 10 years, you have a certain upside, which can be very, very interesting. But as I said, it's limited.
So it's rather a longer term investment, 10, 20 years plus, you would say.
Ideally.
So that you can, ideally, yes. I can say that, and it's very interesting also. The beauty of these assets is that other than, for example, if you speak of stocks, of course, there is a company behind that which creates some products, and you can be emotionally attached to it. But in the case of lifestyle assets, there is a real object which is normally connected with a lot of passions. Cars are an object of passion, art, fashion, also whiskey or wine, and all the other type of aspects which we are, or subcategories which we are discussing. It should be actually easier for people to get a natural access to them. What is your experience with respect to that? How easy is this category for people to kind of do the connection and the link as an investment object, not only as a consumption object?
I think there we have to really differentiate between people who directly invest in lifestyle assets, like by owning them, and people using our application. I think people directly owning such assets as an investment, they have a high emotional component. People using our platform tend to have a lower emotional connection. They have often an interest in a category, but the main driver to invest is like the expected performance, considering the expected risk involved. But it's purely the monetary aspect, and the emotions are only helping you to choose maybe which is the right category, which is the right asset, and can be very helpful, like to catch your attention. But ultimately, the decision is often really, really driven by the financial attributes of the asset, at least in our community. And I think the main reason for that is you're doing everything digitally. Like you download the app, you create an account, you buy a fraction of it, but you actually never see it, you never drive it, you never taste it, you never wear it. And that's why probably our community is a little bit less emotionally attached. But what's definitely the case is that all of those assets have an amazing story. A background, owners, like previous owners, a history, and reading about this history can really, really be entertaining. So we also hear often the feedback from the community saying, I read about every asset. I don't invest in every asset, but I read about every asset because it's entertaining. It's a lot of cool content and information. Even if I end up not investing because maybe I'm not convinced about your forecast or about your assessment of the current market, I still like to read and learn about those categories. So I think it's
a storytelling.
It's a storytelling.
It's amazing. In your case, really, each asset has its own story, and the app is easy accessible, right? It's just downloading the app and then opening an account. I think it's from the experience, it's probably done within a minute or two.
Yeah, totally. I mean, we are a tech company and a platform, and obviously, we are prepared for the future. So everything is blockchain based. And if you care about self-custody of your fractions, of your tokens, you can easily also use Splint Invest just as a broker and take care of the custody of your tokens on your own and export everything. But almost no one is using this feature. Most of the users, they are very, very happy with us taking care of custody. So they download the app, create an account with the email address, and start investing even with credit card. So it takes you, I would say, max 2 minutes.
Set it up. Also, we have a small present for everyone who is listening and also for our users of the platform. If you open an account, if you're on UMushroom and want to open an account with through UMushroom to Splint Invest, Splint Invest is one of our partners. We have a profile page of Splint Invest with their products. There is also a promo code, which is UMU75, 75, because you very generously give to every new user €75. If they open an account through us and start investing into lifestyle assets. As always, we are very grateful to, if you have questions and comments, address them anytime to us in the chat or at hello@umushroom.com. And Aurelio, do we have something else to add? Did I miss something in which our users need to know?
No, it was a pleasure being here. Maybe just one comment on the bonus code. We are very, very happy to give you the €75 starting balance, but just as a matter of transparency, like it's money you can only use within the app, either to invest or to pay fees. But like you cannot like create an account, take €75 and withdraw them to your bank account. Unfortunately, we also have no machine which is printing money, so you can use it but not take it out. Just as a disclaimer. But no, it was a pleasure being here. Thanks a lot.
Huge pleasure to have you with us. A very interesting topic, very inspiring topic. Again, thank you for your attention. And in case of questions, don't hesitate to write them to us. And we are going to share the relevant information about the app in the comments and also during the podcast. Thank you so much and looking forward to seeing you again with us.
Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.